This trading indicator tells you what the best time is to buy and sell a stock. And that trading indicator is going to be the RSI. So as you can see here, the RSI is not yet on the TradingView chart. So if you guys are going to want to use this trading indicator, you're going to have to go on TradingView or whatever charting system you use. We just like to keep it simple for people. And you can go to tradingview.com and put on all these indicators. These are EMA lines, as well as the MACD, but those we've already discussed in other videos. So if you guys want to watch that, you can check the MACD video on the channel. However, if you want to put the RSI on, what you're going to do is you're going to go to TradingView, go to indicators up here, search up RSI, and just do the first one that pops up, Relative Strength Index. Now, let's explain what the Relative Strength Index is. So as you can see here, the RSI is down below. And the RSI, really what you're going to want to know is the yellow line. You don't have to take into account too much the purple line. We're not going to be worrying about that in this video because we're going to try to keep this pretty simple. But what happens is basically the RSI is going to be typically between 30 and 70. Now, if the RSI is at 70, as you can see here earlier today, that means you are overbought. That means they think the RSI thinks that the market is going to go down at some point soon because there's been too much buying and it needs to be taken back down by people selling. Because obviously in the stock market, people buy, and then they want to take their profit. If it is above 70, that means the RSI is indicating to you, hey, people are buying more than they probably should. Now, if it's at 30 or below 30, that means people are selling too much. And it's most likely going to be counteracted by people buying up the stock because they think it's undervalued. And you can see this in action here. So the best part about stocks is that you get to check back on the charting system what has happened previously, and you can see how that kind of affected it. So the RSI during the pre-market today was about 26. So it showed that Apple was pretty oversold and probably shouldn't have been sold as much as it was. So at market open, the RSI was 30 and they were sitting at about $143. And what happened? The RSI went back up. It went all the way to about $53 and it went up to $144. It went up about $1. And then it continually went up because the RSI wasn't oversold or overbought. And then eventually throughout the day, it got to the oversold area. It went above 70, and now in after hours it is going down again. So most likely tomorrow, since we're overbought, now we're most likely going to see the RSI come back down and become oversold again, and most likely Apple will be opening lower than $145 and maybe be on a bit of a downtrend. Now we like to kind of pair all these indicators together. Like the MACD shows that it's also trending down. The RSI was too overbought here. So just buying when the RSI is overbought is just not a good idea because everything is always going to come back down. It's always going to come back up. So if the RSI is below 30, I like to trade when the RSI goes above 30 and hits about 35, because that just means that it's most likely trending back up in the right direction. And you can also pair that with the MACD, but make sure you guys check the MACD video to see how that works. But that's basically how the RSI trading indicator works, and you guys should definitely be adding this to your charting. But yeah, that's going to be it for this video. If you guys enjoyed, leave a like and subscribe, and I'll see you in the next video.